involved in a lot of things in the city and on the financial task force. Chip.
Chip Stearns, the consultant from Newport, been working with Newport City since 1996, much more actively since May of 25.
Great. Susie, go ahead if you're still, yeah.
Susie Small, 3-year resident of Newport and on the Fiscal Task Force.
Awesome. And then Rick, do you mind? I mean, we
Everybody knows Rick.
Yeah.
Good morning, everybody. I'm Rick. Everybody knows me. And I'm just so y'all know, I'm traveling with Dave LaForce, who's driving on a meeting this morning.
Awesome. And then, I see we got folks in the city council chambers. Do you want to go ahead and name who's attending and just quick intro, name who you are? I'm not sure.
Tom Bernier, Director of Public Works.
Awesome. Morning, Tom.
Carrie Schultz,
Good morning, Travis.
Financial and Office Admin.
So, and then we got members of the public officially. You wouldn't mind saying your name and
Ann Sherrillo, residents of Newport for about 17 years.
Wonderful. All right. And that tees up KBS. You guys want to take it away?
I am Andy Bashon. I'm the co-managing partner at KBS. I've been here 39 years. Been doing Newport probably most of those years. Probably picked them up 30 years ago at least, if not more. And I'm a resident of St. Albans.
Awesome.
And
Bill?
I am Bill Kaiser, also from shareholder at KBS. I've been at KBS since 2007, and I believe I've been working on the Newport audit since then with Andy, since I started. And I'm a resident of South Burlington.
Great. Okay, so do we want to start with questions, or did you guys just kind of want to do a walkthrough of, because this is, I kind of would like a little bit of an education of the audit and what and how to kind of read it, like what stands out, what is standard, maybe what's not standard because of Newport. I mean, there's things that I can see as roughly like.
If you'd like, Carter, I can start just by going through the financial statement and the format of that, the layout, and then we can kind of get into how the audit process worked out for Newport. As far as Monday night, I'd probably rather keep that a little bit more streamlined, just because it's with the entire council meeting, and just do a like highlight overview of the financial statements, if you would agree with that, versus this being a little bit more in depth. I'd like to talk today about kind of the improvements that we've seen year over year, which in my opinion were pretty drastic. We're here in October and not March. But I can get started now with just the format of the financial statements for a governmental entity.
Great.
Like.
Well, if I could just jump in for a second and say that Carrie and I have done the agenda for Monday night, and I'm counting on you guys, like the total conversation Monday night running roughly half an hour. It could go a little less or a little more, but that would include time for Q&A from the community and the council members. So I think that your idea of trying to kind of streamline it, give us a treetop version, and then to answer questions that people might have is, I think, spot on. And I will, as a facilitator, I will try and limit that conversation to roughly half an hour if I can.
Right. Just a couple of things in that regard. Normally what we do is, if we are meeting with a finance committee first, is that's where we're talking the detail. And then in essence, the finance committee is presenting the financial statements to the board, and we're there to present them, but it's the finance committee saying, here's the financial statements, please approve them, etc. The other thing Bill and I talked about is we'd like to keep any questions coming from the city council. We're not prepared to be answering questions from the general public unless they go through the city council.
That's totally appropriate. Yes, we can manage it that way.
Yeah.
And also we're recording this and we'll be posting this online. So this is another resource for folks if they want a little bit more of the walkthrough element. So, yeah.
Perfect.
All right, well, I will get started now. The financial statements for the city of Newport, June 30, 2025, we issued an unmodified clean opinion. It was dated, let's see here. I think late September, we were able to wrap everything up.
Yeah.
But the one big difference in the financial statements year over year, this year we were not required to have a single audit. In 2024, the city had $750,000 in excess of grant expenditures. Most of that was due to the water tower construction project. There was about $200,000 deferred this year, which was fully expended, obviously, with that tower almost nearing its completion stage now. And in 2025, other funds have been acquired through means of financing and other grant purposes to complete that water tower project. The first section of the financial statements is referred to as the management discussion and analysis. This really follows along with the audit, but it's management's chance to highlight changes year over year since the financial statement is not comparative. It also gives management a chance to discuss future events that are going to be taking place in the city and a more detailed observation from what's in the footnotes of what's going on in the city in the current year. And then after that is the first section of financial statements is referred to as the government-wide financial statements. And this is more of an accrual basis financial statement, similar to what you would see in a for-profit or nonprofit business, where capital assets are capitalized versus being expensed in the fund financial statements. This statement would not necessarily follow along with your budget. So if you're looking at the expenses and saying, oh, wow, these expenses are way under what we budgeted, that would be the next set of financial statements. This section is the accrual basis. There's also deferred outflows, inflows, and net pension liabilities. This is all related to the city's Beamers investment for the retirement plan. Again, these expenses are not included on the fund financial statements, and they're really, it's alarming. A lot of municipalities that we meet with, the council might have a limited understanding of the net pension liability. At the city, it's $3 million. That's not an obligation, and by no means a current obligation of the city. It's just really the shortfall of the state pension fund and potentially the city of Newport's obligation to that coverage as employees retire. One thing I will say is this really, based on 2024 numbers, and the net pension liability will tend to fluctuate depending on market conditions as well. So year over year, there could be drastic changes in those amounts. Really nothing of concern, even though it is a liability on the government-wide financial statements. Another thing to note, the fund financial statements that I'll discuss next do not include the water and sewer fund, which are business type activities. These are included here along with the general fund, capital projects fund, and all the non-major funds that are included in the city financial statement. Again, moving on, there is like a income statement per se. It's the statement-wide government financial statement of activities. On that accrual basis, the city had a loss of $284,000. Total general fund revenues of about made up of about $13 million between grants and property taxes being the majority of those revenues at just over $11 million. One thing Chip had wanted us to point out throughout the audit was a good chunk of that $11 million is obviously the school appropriations. I don't know the number off the top of my head, but I think it's between $5 and $6 million is collected by the city and then passed through to the school district. So while that is reported as revenues, it's immediately handed out to the school throughout the year. About page.
It's 5.2 million, Bill.
5.2 million. Okay. I knew it was close. I was going off the top of my head from memory. The next set of financials is the fund financial statement. The general fund is reported here, and that's going to be reflected very closely to what is budgeted throughout the year, or the budget that's voted in March, each March. The total fund balance is $792,000. I know that was a big concern for the city last year during the audit. A large chunk of this, there was an attempt to commit it. Andy and I got the commitments from the city and kind of said it would have result. I think it was originally like $1.3 million in committed fund balance, just based on the old practices used by the city. Andy and I talked to Linda Sullivan about that, and the council had made a vote probably around December or January last year to uncommit all of the funds that were previously committed. Past practices for the city was any budget line item, if it was underspent, they would commit to a future year.
Well, not anyone. They pick and choose, but
yeah,
mostly it was in the road construction and so in that area, because they underspent through June 30th. They were in the middle of working on road projects and stuff like that, so they needed to roll over that unspent monies by June 30th to be able to spend in July and August.
Yeah, and typically what the city would like to, I mean, the goal for the city should be to get back on track to be able to commit funds. But a lot of cities, they budget for future capital outlays. They may put $5,000, for example, into a pot year-over-year budget for it and not spend it. Those types of funds would be committed, not necessarily line-by-line budget items just because of underspending. So that's what those funds are. There are restricted funds as well, $700,000. These are restricted for funds for things like the state annual funding for reappraisal projects, which I think the city of Newport typically gets about $19,000 a year from. Walmart funds of roughly $400,000 that are still remaining to be used for future economic development. And there is a footnote in the financial statements that you would see later on that breaks down the total restricted committed funds and the purposes for each. I believe the only committed funds of $7,000 is a tennis court sinking fund that was set up years ago. It's not currently being funded. I think that number has been there for a few years now. It's a pretty steady figure, but that is the only amount left in committed fund balance. There are reconciliations. Really, all these are reconciling the fund financial statements to what you would see in the government-wide financial statements. That's after the balance sheet. So you'll see that the fund balance of the general fund is $800,000, for example, and then increasing and reducing that figure is the capital assets are capitalized in the government-wide financials, as well as any long-term debt, the net pension liability that I was discussing, getting you down to the $5.6 million fund balance in the government-wide financial statements.
Bill, would it help if I shared my screen? And
yeah, you can. Does everyone have the financial statement? I'm sorry, I didn't even.
Yeah, I was just going to ask that at least during the city council meeting, you share something visually, because trying to flip through the pages of this document and keep track is a little cumbersome.
It's 62 pages, Hal. So yeah, I understand that. Sorry about that.
And not only that, right now we're going page by page, but there's going to be a point where we're jumping all over the place because we're not going to go over all 62 pages.
Yeah. Thank you.
So do you want to share yours, Bill, or do you want me to share mine and I'll follow along?
If you want to share yours, yeah, that'd be helpful. If you can figure that out.
If I can figure it out, is right.
It's a little screen, little square box next to.
Yeah, I clicked on that, but it says choose what to share with meetgoogle.com. Microsoft.
Do the window that has the PDF open.
A window that has what? I'm open. I'm sorry.
That has the PDF open of the Newport 2025. You know, your audit document is open in a PDF.
I think I'm there. Hold on.
Okay.
Oh, there we go. Thank you, Andy.
You can all see it?
Yep.
Yeah. So Andy, if you want to go down to the next page, yeah. Yeah, so this is kind of the income statement for the general fund, the fund financials. On here, like I had mentioned before, the taxes and special assessments for the school are on here, as well as all the debt service in the city's general fund and capital outlays. So capital outlays would be all the capital projects and capital expenditures. Like I said, these are all expensed in the general fund as they're part of the current year budget or previously committed funds. There's also proceeds from long-term debt, not typically a revenue, but in a government-wide financial statement, those would be considered revenue. The net change in fund balance, basically the income loss for the city of Newport's general fund for the year ended June 30, 2025 is $238,000. One thing to go over, and definitely room for improvement. And while it's room for improvement, I think it's strictly due to the turnover in the city manager's office, is the collection of delinquent tax accounts. I believe the city's kind of tasked Frank Cheney with that, but more recently, there was not a tax sale. There hasn't been a tax sale in the city for about a year and a half, and the delinquent accounts receivable is it's on the previous page. It's about
$78,000.
about $600,000. The $78,000 is net of a $555,000 reserve. And what we're required to do for the fund financial statements is consider everything not collected in the first 60 days of the next fiscal year kind of a bad debt and allow for it. So while
which basically means you only collected $78,000 for the first 2 months of the current fiscal year.
Yes. So while the receivable looks like it's $78,000, it's really $600,000 of delinquent taxes, including penalties and interest. With a tax sale, obviously those collections will improve. The city is starting to put together a tax sale with Stitzel, Page, and Fletcher right now, I believe. Rick can correct me if I'm wrong. Chip may be aware of that also. But that would obviously help substantially. Of the $238,000 loss that the city is realizing in the general fund this year, about $332,000 is a reduction in net profit because of the increase of that reserve account. So had the collections been a little bit more successful, the city actually would have shown some profit in the general fund for the year. And instead of a reduction in that fund balance to $792,000, it could have increased, creating room for commitments to future years or future planning to reduce property tax revenues, for example, with past prior year fund balances.
And that could be a positive
obviously
thing for next year as well.
With collections and a tax sale, the anticipation would be that this reserve account would decrease year over year going into 2026. So the city could be looking at a fairly large pickup in the fund balance for fiscal year 2026, depending on how all else falls in the general fund. The other important thing here is cash flows. Obviously, cash flows during the year, I saw Chip's reaction to that. Cash flows in the last few years have been declining for the city. And while there isn't a cash flow statement on the government fund financial statements, it's definitely noticed. And all the collections in property tax revenues obviously would help cash flows year over year and an increase there. The next set of financial statements is the proprietary fund or the water sewer fund. Both funds did turn a profit in 2025. $120,000 in the sewer fund and $828,000 in the water fund. Very important to note that a lot of the the water fund really would have turned a loss for the year had it not been for the grant revenues related to the water and sewer project, which were required to pick up as revenue under gap and government accounting versus offsetting the cost of the water tower themselves. So without those revenues, the water fund would have turned had a loss. There is no cash held in the proprietary funds. I actually like $30. I think there's some type of reserve account in the water fund with $30 in it. So that's all. And there are also accounts receivable for delinquent water and sewer taxes. We do evaluate these along with the property taxes for potential for allowance for doubtful accounts. However, the city does not have an allowance for doubtful accounts because after a year of being billed, all accounts are eligible for tax sale, which in theory would be collected or through tax sale, or the property would sell eventually, and would sell, and through the sale of the property, the taxes would then be collected. And then there is also a cash flow statement for the water and sewer fund on the next page. And the cash flow statement kind of reflects the capital projects and debt service costs on behalf of the water and sewer fund. There is one balance sheet for fiduciary funds on the next page. There's investment accounts with I believe the cemetery fund and is it Prouty Beach or Pearly Niles, right?
Pearly Niles, yeah.
Pearly Niles Fund. Yeah, sorry about that. Those fiduciary funds are reported here. Really have nothing to do with the actual operations of the city. These funds are standalone, and other than the investment activity in each of them and some cemetery fees collected throughout the year, that's really the majority of the activity in these funds. Next is the footnotes. And the footnotes kind of give an overview of many of the line by line accounts on the financial statements. In one of the footnotes, there's a listing of the capital assets, a breakdown of accounts receivable. The capital assets are broken down by water fund, government funds, and the sewer funds, and then also a schedule of all outstanding debt below the capital assets. So that's all debt held by the city. The footnotes kind of give a more, like I said, a more detailed explanation of what's contained within the financial statements. Where Andy is now, there's a future 5-year debt payout schedule that shows the future debt obligations for the next 5 years broken down and then summarized in 5-year increments going forward after that 5th year. And then, like I had mentioned, the assigned fund, committed and restricted fund balances, where you'll see the Walmart funds of $386,000, the reappraisal fund, all of that activity that's in the restricted fund balance, as well as the tennis court sinking fund that's in the committed fund balance of the general fund. There is also a very detailed footnote on the net pension liability that describes all of those figures that I had discussed in the government-wide financial statements as well.
And just to know, we pull all that information right from what the state gives us to put into this financial statement.
Just a quick question on the liability associated with the pension fund, because it's a pretty significant number.
Sure.
That's not something that we should be planning to pay out as a city, or is that something we do need to be planning out to pay as a city?
I don't think so, because the state's telling you what to fund the pension with each year. So really that's a liability to the entire pension fund as to whether or not the entire pension fund is adequately funded and so forth. so over time, because it's underfunded, they are going to probably ask you to put more in as you go. But so I mean, you might want to be budgeting for higher numbers coming out every year, but I don't know exactly how they tell you that now. Do they give that to you up front, or in your budgeting process, or do you budget it and then they send you a bill and you up or down? I don't know the answer to that, but
Nor I, but you kind of answered my question.
Yeah.
You didn't kind of, you did answer my question. You don't have to worry about the large nut to crack. However, there is something we need to be aware of.
Right. What this tells me is that because it's underfunded and there's this big liability of which your portion is $3 million, you can anticipate that the state is going to require you to fund it more adequately, but they'll decide how you're going to fund it, not you.
Okay.
Yeah, there's an actuarial study done every year, Hal, where these numbers statewide are estimated, I guess, through that study. The plan is audited each year by the state auditors, and then these figures are presented and broken down by each municipality that's a part of whether it be VEMR's or VISTER's, which is the Teachers Retirement Fund. So year over year, the numbers are typically pretty consistent.
How it's funded is employee and employer contributions based on a percentage. They did push out in 22 a letter giving the percentage changes for the next 5 years. And I would suspect that we will see a letter sometime during 26 that'll take us out through 2030 or 2031. And I think we're going to see both employee and employer contributions per paycheck increase by more than a quarter point. In most cases, probably by 1.5%, 2%.
Right.
Yes, and those contribution rates are included as part of the footnote as well.
Right. But I think the key takeaway here is that $3 million doesn't affect how you're going to budget. You're going to budget based on that letter basically that Chip's talking about.
And what the projected salaries are and the requirements to fund the actual payroll paid now as a percentage into VEMR's.
Okay.
One thing I did want to point out, Andy, if you can go down to footnote 19, this is a schedule of the debt taken by the city subsequent to year end. A lot of the projects throughout 2025, including the water tower, have been funded by finance debt, which I think we would anticipate. There was a bond vote for the water tower a number of years ago that, and then other debt for a construction loan. The tax anticipation note is something that the city has taken every year. It's basically a line of credit available for anticipated tax receipts that are going to be received throughout the year, kind of to cover cash flow. That's with Passumpsic Bank for $2.7 million. There's also been a new police cruiser that was purchased and financed, which is pretty typical, as well as a construction line of credit for 2.8. Actually, no, that's the $2.8 million, I believe, is the note that the Water and Sewer Fund took out to replenish the general fund for the due to do from. Correct, Chip?
Nope. It's actually it's a bond anticipation note for the construction line of credit that ran out October 6th.
That's what it is. Okay.
And then applying to the bond bank, hopefully December 1st.
Okay. And then the Customers Commercial Finance LLC note is a lease agreement for a new fire truck that the city has recently acquired.
Correct.
Sometimes I find the next schedule, which is the budgetary comparison schedule, the most useful schedule to a voter. This will show the actual year activity for the year throughout the entire general fund, and a comparison of what was budgeted to actual results. So scrolling through there, you'll see the final column is the positive, negative budget adjustments. And down below, you'll see it's a balanced budget and the actual result for the city at the end of the year which is that same $238,000 that was reflected in the fund financials for the general fund. There is a footnote. The city expended $879,000 more than what was budgeted, and there is a footnote for this. However, the city does not budget for like the police department, for example, has grant funded expenditures which aren't budgeted for. They incur that expense and also get reimbursement for grants. Those aren't budgeted for, as well as other various grants and activities that occur throughout the year. So some of that $880,000 is covered by unbudgeted revenues that are up above as well. And that the net being the $230,000 that was not budgeted for. And like I had mentioned previously, a lot of that is the increase of the 60-day reserve. And then just other supplementary information are special revenue fund financial statements for the recreation fund, mooring management fund, and then the private purpose trust funds that I had mentioned in the fiduciary fund financial statements for Pearly Niles, Community Development Block Grant, the East Main Street Cemetery, and the Police Public Safety Fund.
And you'll note that all of these supplementaries come up with a total that's then transferred forward into the main financial statements. This is just a detail of what makes them up.
Yep. And that concludes the review of the financial statements themselves. If anyone has any questions, then please feel free, or I can just get into like the results of the actual audit.
And again, on Monday night, Bill won't be going into that much detail.
Oh.
Yeah, so what was the point?
Mhm.
I have two questions.
Yeah.
And not on the committee. One is with respect to a mistake that was made over the last 7 years, which was a state to the municipal tax adjustment that totaled about, I believe, 1.3 million. And obviously there was a change 7 years ago in which it was not treated as extra income and began to be treated as extra income. And those numbers went to the auditors every year. And that error was not picked up until Chip picked it up at the beginning of this year. And it's cost us not the full $1.3 million, which we would have had to pay anyway, probably, but it's cost us the interest on the loan that we're going to be taking to compensate for that. What is the responsibility that the auditors missing that mistake over a 7-year period feels towards paying that interest for us?
Chip,
Well,
can you elaborate?
yeah.
I'm not sure.
Yeah, right. Bill, do you know anything about what she's talking about? Chip, do you know anything
Yes.
about what she's talking about? Because I don't.
Yeah, in the revenue stream budget, there was a state municipal tax adjustment budgeted starting in 2018 all the way through 2025. And it was projected as if it was extra income in the revenue stream, and that budgeted value was used to reduce the amount to be raised by taxes.
Sure.
And it shouldn't be, because that is actually state payments that go on property tax bills. And it is
Okay.
not extra income, it's credit through the income sensitivity.
So my
And as
answer
it-
to the question is we do not calculate your tax rate. The city of Newport calculates your tax rate.
Right.
You missed it as to where it.
We have no responsibility to tell you whether you calculated your tax rate or not. We are auditing what you charged the town, the city taxpayers based on the tax rate you set. We do not audit your calculation of the tax rate.
Wow.
Okay, second,
So
My-
Ann,
my-
I'm going to jump in. I want to make sure that the members of the task force have opportunities to ask questions. So we can come back to you, but I want to make sure other folks have a chance to ask some questions.
I had one, and I'm not sure where in the document this was. It was going back to the water and sewer fund, and you had founding or some sort of findings that there was actually a profit in both of those entities. And can we go back to that and help me walk through? Because I, as both a voter and understanding all these bond votes that we're taking out, how that was founded because of that's just kind of a funny thing that I did not expect to hear in this walkthrough. And even though there's only like $33 remaining in the account, so what does that all mean? Yeah, because it was like several $100,000 you said, and that just kind of struck me as kind of
So-
the opposite of going and chasing all these.
Yeah,
I
Carter.
think you want me- where you want me to be here on the financials.
Yeah, Carter, a lot of that, like I had said, the ARPA grant revenues of $182,000, which was received in cash in a previous year, as well as a $730,000 grant. A lot of the water fund profit is because of those grant funds. Obviously, if you look at the water fund from a cash flow standpoint, there was a reduction through the due to do from with the for the actual general fund cash, which is paying for the water fund project, as well as the debt that's been incurred. The sewer fund showed $120,000. Again, it's hard to think of it from a cash flow standpoint, how that looks, because outside of these financial statements, there's debt service being paid on the sewer fund, as well as there's depreciation that's reducing that profit of $420,000.
Okay. Okay.
So I think it's important to note here, Carter, that, for example, in the water fund, when he's talking about the grant revenues, those grant revenues come in, especially when they're being used for a capital project. You're going to have that grant income in the year that you get the grant income, but then that capital asset is going to be depreciated over X number of years. So yes, it will all equate once that is fully depreciated, but in the initial year you get that grant income, you have I call it a phantom profit, because that money isn't there to reduce water and sewer rates. That money was there for the capital project that you did. So you can't say, oh, well, we made $828,000. Let's reduce the water and sewer rates. That money's already been spent.
We
on a
actually
capital
probably
project.
lost about 100,000, it's like 90,000 just back in napkin math. If you take out those grants. And you just
That is true. That is true. Yes. I mean, but like Bill said, also there's other components to this. Depreciation is not an expense that comes out of cash. However, debt service is. Debt service doesn't show here. These are statements based on full accrual accounting. So the capital assets go to the balance sheet as a capital asset. The debt payments that you're making out of cash are going to reduce the liabilities, the loans that you have on the balance sheet. So this statement, this cash flow statement, would be very important if well, it's still very important, and we can show it right here. For example, the water and sewer funds spent out on the purchases of property and equipment $2.8 million. They took in from, do we have it here, Bill, from notes payable? Yeah,
1.4 million on the line of credit.
Line of credit of 1.4. The rest of that, the net, give or take, was because you got grant revenues. So there's a negative $1.3 million, if you're looking water fund here, of capital asset activity, capital asset / debt activity, of which most of that was covered, or a good chunk of that was covered with the grants, but it still had a net decrease of $428,000. And again, part of it's because you're using one cash account to pay for everything in the city, and those transfers to other funds are what the net usage by water and sewer fund of the general account exceeded what they took in.
Noted. All right.
And just to mention, Andy made a comment about one cash account. I did want to just point out, and Chip can elaborate too, it's very common for a governmental entity to run off of one cash account.
Everyone I know does.
Fund
Yeah.
accounting. So that is not out of the ordinary, where a sewer fund and water fund typically would not have their own operating checking account.
Yeah, and even though it's not required to have a budget for water and sewer and present the budget in the financial statements, really you should be setting your water and sewer rates based on your own projected cash flow. You're going to take your income statement, your projected income statement, you're going to back out things like depreciation. You don't need to count that. That's not going to come out of cash. But then you're going to add back in the fact that you're going to pay principal payments on debt payments. You're going to pay capital expenditures. So you have to play that. What is really my cash flow from operations? Take out all this other stuff. What's my cash flow from operations? And that's what should be being calculated for your water sewer rates.
Andrew, dumb question. You mentioned you need to calculate a statement of cash flows, things of that. You made a allusion to that or a statement to that. Is that something you guys can offer as a service, looking at our statement of creating a statement of cash flows for this whole budget past year?
I mean, there's a statement of cash flows on the screen right now.
But it's I'm thinking more a little
for when you're in your budgeting process, you mean?
Possibly in our budgeting process. I'm just trying to think outside the box here a little bit with,
Sure.
you know, because that's one of our biggest concerns right now is cash flow and helping us budget for next year and out, something of that nature. So I'm just trying to think of, you know,
we certainly could. I mean, we have to be concerned that we aren't getting into an independence problem or anything like that, but I don't really see that would be the case. Honestly, I think, and I don't want to put it on Chip's plate if he doesn't want it, but I think Chip knows enough about you guys and enough about accounting and cash flows that he would be able to do that. But I do think it's important that that's how your rates are set, not based on these financial statements, because these financial statements are full accrual. That's not what's going to pay your bills. Cash flow is going to pay your bills.
And they do have a sewer and water task force committee that is also separate from this one, that just on Monday night presented for the second time in 6 months a rate increase. And they have all the considerations under their belts, primarily because they have a prior employee for the Champlain Water District who understands this stuff.
Yep.
Okay, thanks, Chip.
And honestly, I think that's part of the problem is that over the years, rates were not increased when they probably should have been. I mean, that's not my call, that's the city's call. But that, in my mind, is what has created the large due to, due from, where the water and sewer funds were utilizing the excess cash that the general fund had, and thus the reason for the debt that had to be taken out to get rid of those due to, due froms. I mean, that debt probably should have been the water and sewer funds, well, should have been the water and sewer funds to begin with, only it should have been paid out of increased rates throughout those years, and will have to be going forward.
Yes, we have 2 more subsequent events that simply by date are not even in this audit. And that's the city council voting for 2 new debts next Monday, November 3rd.
I don't want to interrupt this, but I have another question around a different question, not water and sewer.
Sure.
And although just a quick summary of all these discussions, grateful for the water and sewer task force and forever noted, and we're working on how to account for and represent grant funding so that folks know that's a constant and another way that this has again tripped me up. So going back to the fiscal, this task force is really trying to look at our policies, internal controls, And I see that like the first note, summary of significant accounting policies. Are there other sections or other takeaways besides this one that clearly reads to me as like, hey, this is helpful in the conversation and around where we're going with our financial policies? Are there other places within this audit that you would say, hey, check this section out when forming and crafting these policies?
Like I had mentioned, I think there's been vast improvement, especially since Chip has come on, but also Rick, the turnover there. I think with Carrie coming into the city manager's office, there's going to be additional improvements with that space being filled. One of the things that we noticed in 2024 and then improvement in 2025 was the timing of grant billings. Again, a big piece of cash flow. You've got a reimbursable grant and you're not requesting reimbursement in a very timely fashion. That was much improved this year. Back, I think this time last year, we were still booking accounts receivable for potential grant reimbursements, and that was not the case. I believe with Frank's help, we captured everything on a really very timely basis where we didn't have any unallowed for grant revenues on the financial statements. So that is one area to kind of create some policies for more timely grant billings department-wide. It's not necessarily the clerk's office or the city manager's office to track all this, but for example, Public Works, Police Department, stuff like that. I know one of our senior auditors worked in the police department with the lady that does a lot of the billings there, and said that she was very in tune with the grants that were available and very helpful in helping us along the audit, identifying what was left to be collected and billed. So there are improvements there. It's just continuing to improve, developing policies. I don't think Chip plans to be in the city of Newport forever. So kind of using his expertise while it's available and putting together those policies. The other one, the policy is in place, but just not followed, is the tax sale policy. Some cities put together a tax sale policy that severely limits their ability to go to tax sale, saying if 10% of our taxes are delinquent, we go to tax sale. Well, in the city of Newport, that would be $800,000. You don't ever want to get to that point. So I wouldn't recommend that. I would just follow the state policy where you can't go to tax sale in the year that it's billed, but as soon as you're eligible for tax sale in the state rules, you go to tax sale. Those are proven to be very helpful. And obviously it's a way to collect all your taxes. And looking throughout the financial statement year over year, there's been some places in Newport, and you see the same at other municipalities too. It's always the same people that are delinquent. But if there's a tax sale, they're always going to pay up. So that's another policy to focus in on. As far as what we do a walkthrough of internal controls on all of our audits. In the year of a single audit, we'll do a more in-depth look at internal controls. Cash is being reconciled on a monthly basis. There aren't issues around that. We make a substantial amount of adjusting journal entries for the city's audit, but any audit, whether it's a governmental or for-profit, we always say if you have controls around cash, accounts receivable, and accounts payable, your GL is really going to fall into place and be accurate. We might make adjustments to move some stuff around, especially on the P&L side. But the background of cash, AP, and AR for the city of Newport, while there are adjustments, is pretty solid as far as month-end close process goes. A lot of that is done in the clerk's office. I think some of that role could flow through the city manager office, depending on how your policies work out. Back a year ago when Becky Tarian was still there, there was a very good, strong checks and balances between the two offices.
Really?
So continuing that would be great now that the city manager's office is staffed.
Great. Thank you for those highlights, and definitely some themes that we have been picking up on, but again, more context is always helpful.
Yeah.
Al and Lori, do you guys have any other questions for
I did have one question about the uncompensated absences and accrued absences, because there's a pretty large number there, like $181,000.
Yes.
Is there any feel for when those are going to be payable? And those are cash payouts, if I remember correctly.
Yes, Hal. So sorry, I should have mentioned that. That is actually one change from 2024. Governmental accounting has now required us to estimate a current portion and record that to the fund financial statements. So last year you would not see a liability if you're comparing the financial statements year over year. This year in the fund financial statements you would. Really what we do there is go along with the city's policy for paying out sick, vacation, and comp time. Comp time is comp time and vacation. Looking at year over year performance of usage and payouts with Stacy, it was determined that vacation and comp time is used within the next year in all cases. Nobody really loses time in a use it or lose it policy. I think there is a chance for a one-time payout over the course of the year, but Stacy had mentioned, especially in the months of October and November, any vacation carried over the next fiscal year is really used during hunting season for many of the employees. Common in Vermont, but the sick time is a little different. That can be carried over indefinitely. I believe the city does 220 hours. I forget, that's really off the top of my head for a payout. But historically, we've always had to break out in the government-wide financial statements the current and long-term portion. So we use that same methodology. The city is always considered 1/3 of the accrued sick time to be current, without really knowing the actual usage and payouts year over year. We continued that methodology of 1/3 is considered current and the remainder is long-term.
Right, and it's important to note that in the past, it was always based on what was vested. And vested no longer matters as to whether it's accrued or not. It's what is anticipated to be paid out over the current period, the next 12 months. So that has to be a calculation, an estimate based on historical information and expectations. The other thing to note is that in the past, you always only accrued the actual payroll for these items. The new GASB requires that there's also an added employee benefit / payroll tax component to these accruals, because that's what's going to end up getting paid, not just the salary, but the benefits along with those salaries, specifically payroll taxes.
And
So
Hal,
that's why there's such a big jump from last year.
yeah, Hal, just to note, we also do audit, obviously, the compensated absences accounts, where we look at all the individuals, make sure nobody's in excess of the allowed accrual. Rates are properly being used for each individual employee, et cetera, and all that.
So Carter, I'll just say, I appreciate this, and it's given me more questions to ask Mr. Stearns. So just so you know, because there's a lot of stuff in here, especially about the bonds and things that I was not aware of. So, but I appreciate this documentation. It's been very good.
Great. Thank you, Laura. Yeah. This is the beginning of a lot of other conversations for sure.
I just
I get, I was gonna say, if department heads have any questions, I know we have remaining, so they've been listening. And then if we have none, you're good. Okay, we got 2 minutes. Go ahead, Ann or Pam.
It's a silly question probably, but in funds or monies due from the sewer fund to the general fund, it was about $900,000, as I recall, either in this audit or the last audit. And what I want to know is whether or not that is just totally the cash due, or does that include some sort of depreciation, which I never thought of before, as possibly being included. I would prefer it to just be cash.
Pam, that would not include depreciation. That's strictly cash that's moved from the general fund to the water and sewer fund and vice versa. Like I had mentioned.
It's the cumulative effect of the sewer fund or water fund, whichever one we're talking about, cash receipts versus cash disbursements.
That's fine. Thank you.
Yep.
Great. All right. Right in time. Quick appreciation and thank you for all the work. We'll see you on Monday. And yeah, anytime, folks, we're going to have a little bit of a discussion, like Rick said, but we have also a super stacked agenda on Monday. So again, I think this is beginning of many other conversations and keeps us busy in the financial task force. So
Yeah, I mean, all it can do is improve your records throughout the year and the financial reporting at year end. So
absolutely, absolutely.
Thank you for putting this together, Carter.
yes, definitely.
Yeah, thank you for coming and joining us first thing on a nice Wednesday.
Absolutely.
No problem.
All right. Thanks, team. Thanks, KBS.
Thank you, everybody.
Thanks,
Bye.
public.
Good, have a good day.
All right. See you, Chip.